And as promised, we have brought Dad back to talk about the investment side. So hopefully most of you have listened to the previous episode. If you haven't, you might want to double back because we're not going to repeat anything that's applicable on both sides. But I'm so excited to have Datley here with me today to talk about, again, about just tax strategies for investors. We talked and went through everything that you would need to know at a high level, questions you may want to ask your CPA if you're a real estate professional, just on your returns and ways that you could potentially, save money and things that you should be thinking about moving forward. And what we realized when we were talking through this prior to this is that a lot of our agents, and the two of us as well, if you're in the real estate industry, typically you're all in the real estate industry. You're investing in the real estate industry. You own rentals. You might be flipping houses, things like that. Right. And on the flip side, I also know that a lot of our agents probably have clients who would really love this information. And a lot of times when we do these podcasts, that's the intention. We always say like our agents are so busy with their day-to-day, and the best thing we can do for them is give them something easy that they could share, a touch point with a client. And this would hopefully be something that people may want to share and just say, hey, I know you bought, a couple properties this year, or you're accumulating at this point a nice portfolio. Yeah. Do you have a great CPA? And even if you do, here are some tips and things you might want to ask. Because like I said, and started off the last episode with, this is good information for anyone, but I think kind of the main target for this would be someone who's just gaining momentum in this space, someone who maybe hasn't really been able to dive in yet, because as important as this is, it does end up being a backburnered item.
Of course, and super, super important. And the strategy part is my favorite part, right? So always happy to talk about that. But, and just even taking a step back, like you said, the people who are in the real estate industry are in it, right? And there's a lot of advantages to that. So, tip of the cap to you guys for educating, I guess, your team and everyone on this topic, just because, like you said, it's a huge need, and people don't reach out or go out of their way to think about it a lot. So, the fact that you guys are even, I guess, providing this type of content or reached out, super, super amazing. So, happy to be here and happy to help, obviously.
I know the undertow in this industry is real. We, my husband, we actually, the other day we were like, oh, we actually met like almost like whatever, close to 10 years ago. And I was thinking he had nothing to do with real estate when I met him, but somehow he just keeps getting sucked into various aspects. It's all consuming, especially if you're in sales. Sure. And then, as you know, as somebody that invests in property, like those type of things, like it's just around the clock, and then you end up in it in other various ways. Yeah. It's just what it is. And so I love that you have that focus from a CPA standpoint. And this was an organic thing that came out of our conversation around, let's do something for agents. We were like, we need to do something for the investments too, because we will touch on what you could kind of weave together if you're both. But this will also be if you are strictly just an investor. So anyway, I want to jump right into it because we like to keep these quick for people. Everybody depends on that. I got a text this week from someone being like, this is a perfect length for my attention span. Yeah. Same. That's why we do this.
It's not like the Joe Rogan 4 hours commitment type of thing.
Oh my gosh, I know. I'm like, no, my ADD brain does not keep up with that well.
Same. I prefer this length of time.
Yeah. Yeah. So if we could just jump right in, I'm going to start with the same question, only because I want to make sure the question about qualifying as a real estate professional and how that might impact you from an investor standpoint, if that's even something that you want to be doing. So can you give us that?
Yeah. And this might get a little technical, but from an IRS regulation standpoint, to qualify as a real estate professional, you need 3 things, right? You need to spend more than 50% of your time doing real property or business activities. And I think we talked about it, but that can be the gambit of, flipping houses, renting, brokering, anything related to real estate. And like you said, it's like, there's so much that I don't think people are taking credit for, even like researching the market, like that counts as real estate activities, right? So that's always, right? But so that's number one. Is you have to spend a majority of your time, over half of your time, doing real estate type activities. 2 is what they call the real estate professional hours minimum. So over the calendar year, you need to spend 750 hours total annually on real estate activities in order to qualify. So same thing, and that's why it's super, super valuable for people who are real estate agents, because 100% of their time is spent on real estate activities, right? So I guess unique qualification there. And then the third is more not real estate specific, but active versus passive participation. And that's super, super important because one of all the benefits, or I guess a majority of the benefits, come from being able to take your, call it your investments or your rental property, I guess, expenses, and usually it's passive income. But as a real estate professional, you're allowed to offset that against called earned or active income, meaning like W-2, 1099 wages. So super, super advantageous to be qualified as a real estate professional. But that essentially means you need to spend at least 500 hours on a particular activity in order for it to be considered active. And obviously with that 750-hour real estate professional rule, you kind of automatically kind of qualify for it anyway. So I'll say that those are the three areas to actually qualify.
Okay, that's awesome and good to know, just to kind of kick off. And I feel like I'm going to go off our typical, because I think this will vary a little bit. So what we said to start, and I like to I'm someone that when I listen to a podcast, I like to know, like, what am I working with or what am I dealing with? So we said, we're going to go through write-offs, we're going to go through structure, and we were going to go through strategies for going forward. We did that in the previous. What I'd like to do, because I think that structure this time is less of a topic. We talked through structure for your real estate business, but also you were just touching on the pass through. So if you want to just kind of wrap that piece up, we can then dive into the write-off. So I'm going off a little bit.
Yeah, no, you're hit the nail on the head from called the legal structure perspective. Like 99.9% of the time, it's either going to be some form of LLC or classified as an S corp, right? And regardless of which one you elect, it's going to be a pass-through entity anyways. Like so it does make a huge difference between investor and call it non-investor type of thing. So I would agree.
So from an investor standpoint, talk me through a few write-offs that people should be asking their CPA about.
Yeah. But so I would say if you're talking to your CPA, just making it clear that you are a real estate professional and that you do hit the hours and call it criteria in order to be considered so. Because that's going to be a huge flip, when he's doing or when they are doing your return, right? So for me, so some of the write-offs when you're able to get that designation is depreciation and kind of accelerated depreciation, and there's some interesting strategies that you can deploy, because you're able to kind of take some of those expenses against your kind of W-2 or earned income.
Like especially people that are within the real estate industry, right? Someone might be flipping something, or they might be, it might be a development, whatever it might be. So buying furniture, like talk me through some of those things you might stay away from, things you might say, sure, like ask the question, it can't hurt.
Yeah, I would say always ask the question, and always make sure you're keeping your receipts, right? Because any amount of money that you're spending on real estate, is most likely going to be expense, like staging, like you said, furniture, like those are like capital expenditures that you're spending in order to try to either increase the value of the home or to sell it, right? So I would say from a write-offs perspective, just making sure that you're getting credit for all of the money that you're spending, so really making sure you're keeping all your receipts and just analyzing or talking to your accountant about it, like which ones can I take credit for and which ones can I not, right? But I guess from a principal standpoint, I'll say anytime that you're spending money to try to make money, most likely going to be a tax write-off, right? And those call it any accountant will be able to determine. For me specifically in the real estate industry, you have your cash expenses, and those are like the cash write-offs, like you said, right? And that's staging the mortgage interest, things where money is leaving your bank account in order to get that tax deduction, right? For real estate professionals, being able to offset your income with depreciation is super, I guess, valuable because you're still lowering that income number from an expense, but no money is leaving your bank account, right? So it's a non-cash expense. You're able to lower your taxable income number without actually paying any money. It's just from called the wear and tear of the actual asset, right? So I think from a write-offs perspective, if you are a real estate investor, that's kind of like a really key area that people can can really save on. I know for myself, my tax bill this year was I think close to 0% because of all these depreciation and acceleration of depreciation rules, right? So I would say if you're in the industry, I guess non-cash expenses are things that you should be looking for.
Okay, good to know. And that will roll us right into looking forward. We touched on that before. Just there's some things that you might say today that people will say, I didn't do that. And 2023 is in the past, and that's okay.
Yeah.
But looking ahead, what are some top tips you have for strategizing? If you're someone that, maybe again, focusing on this target of like people more in our age range that might, I wanted to buy my first property by 25 and had a couple, like what I'd like to say, like singles and doubles, like small places, really scrappy. So like someone that's focusing on that, like, what are you looking at going forward to try to offset? Because I think sometimes you wish you knew more when you started.
Always.
I mean, you always do in anything. But if you haven't started, if you're someone that's saving, if you're like, I really want to have buy a multifamily this year, whatever it might be.
Yeah.
What are your top tips for strategizing?
For sure. No, and I'm similar to you in that way as well, right? I would say the singles, doubles, maybe some walks in there as well. But even just getting into the industry, I think is the important part. Because as you know, real estate kind of just builds on itself and kind of just appreciates over time, right? So, not to digress too much down that I guess avenue, but no, like that, because there is kind of different stages and different levels to real estate investing, right? But some of these things can be valuable regardless, and I guess in the scope of a real estate agent or a real estate investor, like I think the avatar profile that we're talking about, right, it is someone who's probably in the real estate world, earns a 1099 income, so some sort of earned or active income, and has a handful of call it, or even a couple investment properties, right? Where it might be cash flow neutral, essentially, but really going to be market appreciation, right? And that's the ideal case for me, at least to start out. If you can get that, I think you're winning. Even from that standpoint, I think being able to offset your W-2 income is valuable, right? So say you are a real estate investor, right? And starting out in the business, and say you make $100 in W-2 income. Your taxes on that are going to be called 25% ish, on those types of wages, right? But if you also have a rental property, or a few, we'll just say one for the purposes of this example, and you can offset your active income with your passive income. Now you can essentially do things like cost segregation studies, or solar. I believe is very valuable tool in the real estate investing industry. Doing things like that takes that $25 tax bill, and you're able to accomplish things like take accelerated depreciation on your home, right, and kind of be able to lower that $100 taxable income number, and save on taxes that way, and just add value to your home, but with things like solar in general. So I guess different depreciation and tax credits that you can do if you're in that unique situation where you're earning W-2 or 1099 income, but also have these, call it, real estate investments where it could be generating non-cash losses.
It's funny. My dad always says, like, oh, it's great if you have a big tax bill, right? That means you made money. And it's not untrue, but at the same time, I also do see and think that there's a lot of people, it's just such a busy industry. A lot of people making a lot of smart decisions. And then you get up to this time of year and you're like, oh, I wish I did these things to improve my business, or I wish I did these things to add to my kids' college fund or to my retirement, things that you can do, and just strategies to plan where, if you're going to be paying the money anyways, right? Like pay it for the future versus, just paying it all toward the
Yeah,
government. So I think that it's a
exactly.
really good conversation to have.
Yeah,
I'm always interested to hear just the ways that you can get in more involved and more in tune with. It's really like your financial health, but it's hard to think about because it's proactive and we don't all have all the time in the world. And I know personally that when you get your tax bill and like to your point, I mean, I've had it and have people say, oh, like if you just put this much toward,
yeah,
your retirement, it's like,
yeah,
well, okay, I maybe you don't have that right now. So you
yeah,
want to be planning for that ahead of time. And so I thought this would be helpful.
yeah,
I'm so glad we reconnected on this,
for
and I'm
sure.
really excited about the follow-up. So if you want to follow up with us, if you feel like you would take a deeper dive, if you feel like you'd like, hey, no, you didn't go nitty gritty enough for me, like I'd love to hear more strategies. Truthfully, like I have small children and I want to know what's the limit that I can pay them? How is that structured? Those type of things. We are going to take that deep dive together and have that as something that's a resource for everyone. So
Yeah,
let me know if that's something you're looking for, and otherwise keep an eye out for it because it will be released shortly after these are aired, which I think we have a few weeks runway. So we'll put that together.
for sure. And just to reiterate that point, we're kind of on a pitch count. Not to continue the baseball metaphor, but limited time here. But as you guys can probably tell, that there are kind of deeper dives and deeper modules that we can get in, and so much content to cover, right? So keep an eye out for that. Obviously, from Nicole, and super fun conversations to be had. So looking forward to, glad to reconnect, and looking forward to even having more conversations about this.
Yeah, this is awesome. And I think what I do want to leave everyone with as we were talking, I was thinking about the fact that we are seeing the market actually loosen up a little bit, and we hadn't touched on the market at all. But in our area, I know that people have been waiting like for the other shoe to drop for
Yeah,
so long, and maybe holding off, being on the sidelines.
yeah,
Sidelines are not a place to be right now, and I really don't think anybody across the board would disagree that if you want to make an investment, if you want to do something of this nature and you want to be in the long game, just do it. I think that right now is a good time. I think if somebody wanted to do something and they wait until maybe this time next year, they you can replay this in
yeah,
this 25. I think you probably regret not doing it now in terms of
right.
price. Don't get so caught up on interest rates, things like that. This is a good example of people get so caught up in that. People get caught up in these, like, this is the monthly payment and they're only honed in on that, but they have a 24% on their credit card and they have an 8% car payment, and they might be spending thousands of dollars in taxes they don't need to be spending. So look at
Exactly.
your whole picture. This is a great way that you could maybe explore that exercise. And maybe you are so far ahead of the game and there's nothing you can button up, but it's worth the exercise to look at what you did in taxes last year. Look at maybe if you want to make the investment but you're like, oh, the interest rate just jumped, which would add $200 a month to this
Yeah,
payment, and it's something you could do but you don't feel right about it. Go find that $200 a month somewhere else because
somewhere. Yeah,
it is somewhere else. So get
definitely.
creative. Yeah.
That couldn't have resonated more with me, especially like the just do it part, right? With my team, I tell them, like the most important thing for me is field goal attempts, right? In the sports metaphor of just going for it, just doing it. Doesn't matter how big, or it doesn't matter like if you're going to do well or not, but the act of just doing it, you just learn so much, and starting the process is in my opinion like the most important part, right? So no, that definitely agree with it, with everything there, and just like you said, being proactive and educating yourself on it, right? And I know, like, I get it. I do taxes every day, and if I didn't have to talk about taxes, I wouldn't think about it either. But but it's tough given my profession, right? So the people who aren't in taxes, that's kind of what we base ourselves on. It's like, you don't have to worry about taxes. That's because that's what we do, right? And we try to educate you as much as necessary in order to be able to, I guess, create synergies. But for the most part, well, with our clients, was like, we want you to be focused on, in this situation, selling houses, or working in real estate, and then we'll kind of handle all the other stuff, so that both sides can be kind of working more efficiently, right? So no, definitely agree. Definitely agree with a lot of your sentiments there.
Good. I love it. Well, it's been fun working with you. I think this is just the beginning. So
Yeah.
we will wrap up for today. And if people have questions, reach out to me. I can put you guys in touch, and stay tuned for a little bit of a deeper dive in something else we're going to be offering.